welcome, everyone. I'm your host, Henri Arslanian, and welcome to this other episode of the Future of Money podcast. The episode today is a very special one. It's a live recording of a panel that I did in Dubai in May 2023 with the CEO of Fireblocks, Michael Shaulov. In this discussion, we covered a broad range of topics, from the latest developments when it comes to crypto policy and institutional adoption, to really the latest developments when it comes to crypto custody, and very importantly, crypto security. Hope you're going to find this episode interesting. And without further ado, let's kick it off. Welcome to this other exciting session at the Dubai Fintech Summit. As was mentioned, my name is Henri Arslanian, and my passion and the focus in life is the future of money and the future of digital assets. Today, we're going to have a very exciting session where we're going to talk about the intersection of really crypto policy, institutional adoption, custody, and also a topic that we need to discuss about crypto security and cybersecurity. And my goal is to really empower you with the latest developments that we are seeing in this space. And hopefully, you can make your own decision on what their impact could be, not only on your business, but also on you personally as you start thinking about the future of finance and the future of digital assets. I can't promise you we're going to cover everything in the short minutes that I have, but I promise you it's going to be insightful, interesting, and most importantly, exciting. And to do this, because we have today with us the CEO of Fireblocks, Michael Shaulov. Michael, great to have you with us today in Dubai.
Great to be here. Thanks. And you set pretty high expectations now from the session.
I think we'll have some fun. By the way, one thing people don't know about Michael, obviously everybody knows him and sees him on TV as the CEO of Fireblocks, but he's a very avid snowboarder. And when he's not running the company, he does heli ski in British Columbia in the mountains, jumping out of helicopters to go hit the slope. So Michael, we're happy you're with us in one piece today as well.
Yeah, it's important.
So Michael, before we talk about, I have many things I want to cover today. One of the big ones is, can you maybe for the benefit of our audience, explain in a few words, what is Fireblocks, but also how is it different from other custodians that we have in the market today?
Yeah, that's an amazing question. So one thing that I will actually say about what we do that is slightly different is that we don't consider ourselves as a custodian, we consider ourselves as a custody technology provider. And there is a substantial difference in that nuance, because what we actually are running is a technology platform, a technology service that allows our clients to create secure institutional wallets at scale. And on top of that, we have a few other layers that allow them to do secure settlements through the Fireblocks network, secure tokenization through our tokenization offering, and so on. But the interesting thing about the way that Fireblocks is providing the service, we interfacing basically institutions and businesses. And the way that we're providing the business is that people don't have counterparty risk to us, right? Basically, the way that those wallets, the way that the custody is being provisioned is that our clients are the custodians de facto of the assets. We are providing the technology, the ease of use, the ease of deployment, the cybersecurity backend. For that, we're running some of the key shares, but at the end of the day, Fireblocks does not control the transactions. It's the end client that eventually has the control, and therefore it actually changes a bit the way that counterparty risk is being assigned.
So actually, when we talk about counterparty risk, what are the biggest challenges? A lot of people in the room that work for traditional financial institutions, how important do you think is custody when it comes to institutional adoption? And what are the biggest challenges you are seeing traditional financial institutions have when it comes to crypto custody?
Yeah, it's an amazing question. So, we're currently servicing over 1,500 clients globally, including some of the biggest banks in the world, right? So we work with, we are the backend for Bank of New York Mellon. They're the biggest or the second biggest custodian on the globe. We BNPP, and ABN AMRO and so on. So a lot of different banks, also a lot of native custodians that are operating over here like Comaino and others. The challenge I think that people don't appreciate that are coming from the traditional space is that at the end of the day, the question of how good you're doing custody for crypto is primarily a question of operational cybersecurity. Because what you're actually trying to do is you're trying to protect a private key, which is basically like a password, right, for the wallet. And for those of you who haven't dealt with crypto, the idea over there that the person who controls the private key effectively controls the assets, and therefore, if you are being hacked and that password has been compromised, then you immediately lose control of the assets, and there is no recourse. Whereas, in traditional finance, of course, things are very different. Custody is usually being done through a chain of custody, where you have the depository that points to the to the custodian. Then usually they have a bank that points to the custodian. Then there is a brokerage that points to the bank, that points to the custodian, that points to the depository. And it's actually pretty difficult to mess things out. In crypto and in digital assets in general, the question around how good the system is and what is the technology behind the wallets is one of the most critical things in terms of understanding custody.
But don't you think that is also one of the challenges? Because yes, in TradFi you have all these different layers and fees, by the way. But in a way, there's this kind of the custody is outsourced, if you want, from that perspective, right? Yeah. I mean, when you look at the future of crypto custody, do you believe it'll be a world similar to TradFi, where it's completely outsourced, or it's going to be self-custody will play a big role because of the futures of crypto?
Yeah, so to be honest, I think that in crypto, it's actually almost a theological debate of which of the models will prevail in the future. But interestingly enough, after what was happening in the last year, for those who were not following with the collapse of FTX and 3 Arrows and so on, the direction of travel is definitely self-custody, right? Because there is a saying in crypto which goes, not your keys, not your Bitcoin, or not your keys, not your crypto, which means that you shouldn't fully trust or outsource to third parties the control over the asset, right? And that's very different than the way that it's being done in TradFi. By the way, it's also now we're touching, I think, on one of the core topics that we want to discuss today. It's also very different in the way that regulatory schemes are currently being applied. Because currently, the regulatory regimes in crypto are usually being transferred or sometimes just not even transferred, just interpreted from the schemes that we have in TradFi. So for example, the concept of a qualified custodian, that is a term that was coined by the SEC in the 1930s, right? Before we had any computers. And that scheme definitely doesn't take into consideration that you can have very sophisticated self-custody schemes, and that's the direction of travel of the industry.
So you think, I mean, I can tell you even as a hedge fund, in many jurisdictions, self-custody is actually illegal. You're not allowed to hold client assets.
Right.
So do you think this is something that the regulators are getting wrong, that they are not also accepting the concept of self-custody? Again, my personal opinion is that yes, I think that the regulators are currently, and by the way, it's not all the regulators. Primarily the concept of qualified custody is a U.S. term, okay, by the Security Exchange Commission, and in most jurisdictions, actually outside of the U.S., you don't actually have that requirement. There are certain aspects around how do you create segregation of duties and things like that are important, but generally speaking, the core issue of the regulators to understand all the possible schemes, right, that you can have in terms of how the keys are being deployed, how counterparty risk is being mitigated, but simultaneously how you can do customer fund protection, and how you can make sure that if the entire custody chain actually defaults, as a regulator, you could still basically recover assets from bankruptcy through those mechanisms of cryptographies. It's definitely something that is currently beyond the understanding of most regulators. It's interesting, actually. So when you look today, obviously you mentioned that that's potentially a flaw with the regulatory regimes we have right now in crypto. When you look today at the way the crypto industry is looking at security, for example, which is, I know, your expertise and your background, what do you think is the biggest mistake or flaw that the industry has right now when it comes to security as it relates to custody?
So the biggest flaw is, to be honest, that there is mostly no regulation behind it. Okay, if you look at most of the regulators, they don't have specific requirements and detailed requirements of what are the obligations of different players from a security standpoint. They're usually asking you to have some form of framework. By the way, I hope that I'm not kind of misrepresenting the reality, but right now the main regulator that I know that they have something which is quite specific is the New York Department of Financial Services, that they have the Section 500 in their regulation. But generally speaking, most regulators, they don't have specific regulation that is related to crypto security, right? And crypto security is quite a new space, but the point is that even if you are taking cybersecurity regulations for financial institutions, even the most advanced ones, right, for TradFis, and you think that there will be sufficient to protect you from cyber attacks that are unfolding on crypto players, it's actually not going to be sufficient. And I've seen issues around players that are regulated, that they are not doing proper disclosures, that I personally think that it's not like, you know, reasonable given the attack surface and given the threats that we are seeing in the space. I've seen entities, or I've seen providers that are not standing in the standards that I think you should be withstanding in order to mitigate nation-state attacks. So just keep in mind that one of the interesting things in crypto is that it's one of the only financial industries that you actually see active attacks from nation-state players like North Korea.
From North Korea?
Yeah, so there's actually like a report from the Department of Treasury in the US that 20% of the GDP of North Korea is coming from crypto hacking. 20% of GDP.
That's incredible. I mean, because to be fair on that point, I mean, a lot of the hacking we have seen from North Korea, I think that's called the Pegasus group, I believe, in North Korea.
Lazarus.
Lazarus, I'm sorry, that's a different hacker group. What's the, I mean, is this even avoidable? Because a lot of the hacks that happen, and correct me if I'm wrong, happened on DeFi protocols last year. So even these entities, these DeFi protocols, are not necessarily regulated by traditional regulators, even if they wanted to.
Yeah, so we've seen a pretty rapid shift in terms of how those hackers are propagating through the ecosystem. So if we go back into 2016, 17, up until I would say like, you know, maybe 2020, most of the attacks, whether it's by the North Koreans or like, you know, Eastern European groups, were actually concentrated on centralized exchanges. Yeah. So actually, like the reason why we started Fireblocks was because my team at my previous company was doing an investigation on a pretty significant hack that happened on 4 exchanges in South Korea that were breached. Yeah, they stole $200 million worth of Bitcoin. What happened over the last couple of years is that most CeFi players started to adopt proper technology, proper custody technology, whether it's Fireblocks or, you know, qualified custodians or other providers that created a much higher level and much higher level of security around the wallets and the custody, which is great. And therefore, the hackers essentially shifted into the next weakest link, which is basically the DeFi protocols. And now the DeFi protocols are indeed, if I remember the statistics that we ran, about 70% of the funds that were stolen in the last 18 months were from DeFi protocols. Yeah.
It's definitely, I think, if you're a hacker today and you're not targeting DeFi protocols, you're a bit of an idiot, you know. Back in the day, it used to be centralized exchanges, now it's that. On that topic, actually, Michael, I mean, you've been in the security space in a while. What about quantum? I mean, obviously now we're talking about North Korea hacking DeFi protocols. Do you think the quantum risk is a real risk against some of the algorithms that we have today?
The reality, it's being brought up a lot, but the reality is that there are already quantum-resistant algorithms that are not being used because it's being perceived that the risk is far in the future. But what I think is going to happen is that when the risk will actually become material, you will see those quantum-resistant encryption schemes and signature schemes being implemented across the different blockchains. There is a lot of active research that is going into the space. Yeah, I don't know, like if it's like 10 years ahead of us or 5 years or 30 years, right? There are different numbers that people are throwing, but I do believe that the solution will emerge as that risk will become material.
I think crypto will be the least of our worries when that happens as well.
And by the way, a lot of people ask about crypto, but keep in mind that all of the communication that we have with banks, and generally speaking, the internet is a TLS communication, so which can be broken by a quantum computer, and that will be the least of the concerns.
Exactly. North Korea as well will be the last of the concerns at the time. Yes. So actually, as we're running out of time, Michael, a couple of things. I want to ask you, we're in Dubai today. Yesterday on the stage, Brian Armstrong, the CEO of Coinbase, literally praised the UAE and said that the region is standing out in the development of a Web3 ecosystem in the blog that the company published. You're here in Dubai today. I'd love to get your thoughts for the audience. What's your view on what Dubai, not only Dubai, but the UAE are doing on digital assets, and how you compare it to other jurisdictions around the world?
Yeah, so first of all, I will second Brian. I do think that the UAE is definitely right now the most advanced regulatory framework, and I think that they're also quite open to have a dialogue to future-proof the regulations. I think, look, to be fair, I think there is still a lot of work that needs to be done in terms of harmonizing the different views between kind of the free zones, VARA, the central bank, right? There is still, and I know that there is work that is being done, but generally speaking, I think that the UAE is definitely the place to be right now, especially, probably I'm not the one that needs to tell people read the news. The United States, it's not right now in a good place in terms of...
Oh, really? We didn't know about that.
Yeah, in terms of regulation. And I think that what we're seeing right now is probably like, the UAE, Hong Kong, Singapore, Australia, Brazil, globally. And also like, Europe just passed MiCA. So the regulation globally is evolving. I think that the unique thing here, I think in the UAE is that it feels like very nimble, right? So I think that a lot of progress can be done quickly, and specifically we can create, maybe, I hope, right, that the UAE can be kind of the leader in terms of the safety and soundness in this space, and eventually we'll be able to propagate and to sandbox the regulation over here and then propagate it globally.
Talking about Dubai, actually, I want to ask you also a personal question. Obviously, Fireblocks, I think you're based in New York now, but Fireblocks has a lot of roots in Israel, actually, originally. The region has changed a lot post-Abraham Accords and the likes. What do you think this means for the future of the Israeli tech ecosystem, startup ecosystems, and the potential in the region?
Yeah, I mean, I think that definitely the Abraham Accords and everything that happened is unbelievable. It's fantastic. I think that me being on this stage is just like, a wish coming true, and I can talk about it forever. The reality is that I think the synergy between the tech ecosystem in Israel, which I don't know how much people are familiar, but it's basically the second concentration of venture capital investments and startups outside of the Silicon Valley. So everything that is happening over there, the fact that we are able to basically passport and in a 3-hour flight basically bring it over here, it's amazing. And I think there will be so much innovation that will be propagated through here. I think UAE is basically the springboard to disseminate that in the region, because of clearly like the Arab world is clearly, kind of, this is the most advanced country, right, in terms of propagating there. And I think that there is also a lot of interest to deploy more resources and to move resources from Israel to here. There are already a few fintech companies that have done it, and honestly, we're also exploring it to a certain extent.
Very exciting. Michael, we have literally about a minute left. My famous bell is back with me. We're going to do a quick fire round of questions. I need 1 or 2 word answers, and the bell is here to keep us honest from that perspective. And I promise you, as an Armenian, I'm not going to ask you what hummus is better or any question like that. Let's kick it off. What do you do when you're not the CEO of Fireblocks? What's your favorite thing to do on weekends?
To be with my kids.
With your kids, here we go. What's your favorite thing to do in Dubai? Outside of meetings with investors and clients.
Actually, I've never done anything else here in Dubai.
What's the one thing you want people to discover about Israel?
The people.
What excites you the most about the future of crypto?
On-chain identity and programmable compliance.
Wow, programmable compliance. I think we could have a whole session on that topic as well. What industry would you be if you're not in the crypto or security business?
Be a movie director.
Movie director, man. People in crypto are so talented, it's always incredible. Favorite movie of all times?
Favorite movie of all times? Pulp Fiction.
Oh, here you go. If you can give one piece of advice on security to the people in the room, on personal security, on cybersecurity, what advice would you give them?
Use 2FA.
2FA, two-factor authentication. Tomorrow morning, Gary Gensler invites you for lunch from the SEC commissioner. What will you tell him over lunch?
Tell him that what's going on in the US hurts US competitiveness and their ability to maintain, to maintain the leading position in finance.
Michael Shaulov, the CEO of Fireblocks, to finish up at Dubai FinTech Week. The last question, the traditional question, whoever comes on stage with me. Michael, if you could have lunch or dinner with one person, dead or alive, or dinner with one person, dead or alive, who would it be?
Churchill.
Churchill, here we go. Ladies and gentlemen, thank you very much. A big hand of applause for Michael. Thank you very much and enjoy the rest of your day. Well, that's it, folks. Hope you enjoyed this other episode of the Future of Money podcast. If you like this episode, make sure to subscribe so that you're notified of the next episode when it drops. Also, if you like my content, make sure to check out my YouTube page, Henri Arslanian, and where I have not only the video version of a lot of these interviews that I make, but also where you can find a lot of exclusive content, and in addition to the broad range of crypto capsule and future money content that you all hopefully enjoy and find very useful. That's it, folks, and see you guys all next time. Have a good day.